Today, let's talk about the BP pension, the Retirement Accumulation Plan, or the RAP pension. One of the biggest myths that seems to pervade people's understanding is that they have to start taking the pension immediately at retirement. The problem with this myth is that it undermines all the planning and the maximization strategies that are possible with the BP pension. If you joined us for our last pension YouTube video, you already know that the pension plan is affected inversely by interest rates rising. If interest rates go up, the lump sum pension goes down, and vice versa. So if you've been too busy to keep up with what's going on with interest rates, here's some insight. They've been going up, way up. So what does this mean for your pension besides the obvious? It presents you with some choices. Do you take it at retirement, or is there a benefit to wait and see if rates go down? Because they've got to go down sometime, right? One of our fundamental investment strategies is that we are strategic investors. We do not believe in timing the market. But wait, didn't I just say that you might want to wait to take your pension? Yes, but also no. Both answers are right depending on your situation. Let's take a look at more information that we have about the pension plan so that we can educate ourselves to make an informed timing decision that doesn't require luck. Since March of 2022, the Fed has raised interest rates from 0.25% to 5.25%. This is the fastest pace interest rate hike that we've seen in history, twice as fast as what we saw in the 80s. So now that I've said what most of us already know and are already worried about, what are our thoughts about the future of these rates? If we look at the chart here, while both the market and the Fed are estimating and predicting that rates will go down, the market expectations have rates falling faster than the Fed does. So who's going to be right? Only time will tell. The only thing that we know is that rates will eventually come down. The real difficult part is timing when. Over the long run, the expectation is that rates will hover at about 2.5%, but it might take some years to get there, meaning that information probably won't help you make a good pension choice. And the reason that we're all here is to get some good information on what to do with your pension now. Based on the chart that we see here, the expectation is that we'll see a marked drop in 2024 and 2025. So we're going to see rates anywhere between 3.3 to 4.3% in 2024 and lower at 3.1 to 3.2% in 2025. That's not too bad. What does this mean for you? Rates could fall 1 to 2% over the next 1 to 2 years. So if we believe this, then we might have options as it relates to whether you take your pension now or whether you wait to take it. Let's see how this affects your actual BP pension numbers. You're retiring this month. Very exciting. You've got a nice, juicy $1.5 million cash balance pension. It's just sitting there. It's waiting for you. Should we take it? Let's talk through numbers. One option to consider is retiring from BP now and then deferring taking that lump sum pension until rates fall. Let's take a look. In scenario one, we're looking at the current interest rate environment. Let's say you retired this month in July. You want to start taking your pension in August. BP has a 4-month segment rate look back, so they're looking at rates from April of this year. Those are pretty high, right? They actually got even higher in May. So if you're really thinking about when to take things, don't delay. Let's lock in those rates. In scenario two, we're looking at a lower interest rate environment, similar to what we saw in 2021. What a difference in those rates. And you can see the difference in those rates has a $100,000 difference in the total lump sum pension that you get to take. Now here's the question. Will rates be lower in the future? Probably. Here's the crucial thing to note in these calculations. In scenario one, if you apply these elevated rates that we're seeing in the example, the actual calculated lump sum pension is lower than 1.5 million. Why? No matter how high rates climb, you will never get less than the cash balance as a lump sum distribution. This is a big one, a big protection provided by the BP pension. This piece of information is a vital consideration when you're deciding whether to take the pension now or wait. If you have an augmented lump sum with lower interest rates like in scenario two, there's a strong advantage to say, go ahead, take it now. However, if the cash balance is not augmented like in scenario one, you still get a 5% credit from BP, and that can be very attractive while you wait. So you may wish to defer your distribution. Now you might be thinking, well, if I go ahead and take it, what if I invest it? Can't I do better than waiting for interest rates to decrease? If you decide to take the lump sum now, let's say it's the $1.5 million cash balance, instead of waiting for rates to drop, let's say over a year, the break-even rate of return would need to be over 11% over that year time period. That's pretty high. And that's competing with the fact that we just talked about that BP will credit your account 5% per year. Now let's take a look. Is that doable by the average investor? 11%? Probably not. Studies have shown that the average investor only gets 3.6% returns over the long term. If an investor is sticking to a long-term investment strategy, the long-term average rate of an investor who's in a 50% equity portfolio, 50% fixed income portfolio is 8%. So that being said, it's unlikely. So maybe we wait for rates to drop. All in all, you do not have to take the pension immediately. You can continue to receive the 5% interest credit. I think this is an essential piece of information as you're deciding whether or not to defer or take your pension. As always, we never want to make financial planning decisions in a vacuum, and we want to evaluate all of our financial variables before deciding what to do. At WJA, we are experts on BP benefits. We help BP executives plan around their employee savings plans, their wrap pension, their stock plans, their HSAs, and other benefits. Please connect with us online to stay up to date with our insights and reach out to us for a discussion about your needs. We provide a complimentary analysis showing you various possibilities and how we can help maximize the benefits that you have. If you want to learn more about the wrap pension and other benefits, click the link in the description to watch a free webinar on how to maximize your BP benefits.